everyone, and welcome to the panel on cross-border payments. This is the perfect panel to talk about cross-border payments, not only because we have an ideal cross-section of business models operating in the sector, but also because all of the panelists are based in different countries. Let me introduce them. Elizabeth Rosciello is founder and CEO of BitPesa, and she's based in Senegal. She's one of the early entrepreneurs in the sector. BitPesa was founded in 2013 to figure out how Bitcoin can help remittances, and she successfully closed a funding round earlier this year. Harry Newman is head of banking at Swift, which I suppose you could say is the incumbent in the sector. Swift, as you know, is based in Belgium, but Harry flew in late last night from London. Sheila James is vice president of operations of Veeam, formerly known as Align Commerce. She's based in Canada, where she's been keeping things running smoothly through what has been a particularly active start to 2017, what with a major funding round and a rebrand. Michael Kleinstruber is the Director for Client Solutions, Cross-Border Payments, Treasury, and Trade Solutions for Citigroup, and he's flown in all the way from New York City. Citigroup doesn't really need any introduction. They're one of the world's largest global banks and have for some time now been actively investigating blockchain potential in a wide range of applications. This discussion, in my opinion, needs no preamble, since I'm sure that most of us here have, to some extent or other, been exposed to the frustrations of the traditional cross-border payment methods. A lot of work is going on in the sector, as readers of CoinDesk know. And here we have a cross-section of, here we have startups and incumbents who are going to give us their take on where we are and where we're going. As you can tell from the panelists, this discussion is going to focus on business payments rather than retail remittances. Elizabeth, you've seen both the retail and corporate remittance sectors up close. Can you talk us briefly through the main differences?
Sure. I think it's really a question of compliance. So there's a lot of compliance that's really required to remit a transaction in this day and age, especially if it's terminated via third-party networks. So either that's a bank, mobile money, which many of you know from BitPesa. We were the first company to actually integrate into mobile money systems. It's basically like a debit card for emerging markets. So whether you're going into banks or mobile money or cash agents, it's really important from a regulatory perspective to do that compliance and to collect that compliance. And if you're going to do it for a retail amount, as small as $100 or $50, the cost is quite high. So what we really do with BitPesa is we work with wholesale remittance companies, and we help them collect that compliance. We share it with our brokers across the global Bitcoin blockchain, and we make it easier and cheaper for them to kind of access these markets. And I think something that blockchain does really well, and specifically the Bitcoin blockchain, is it makes it so simple to make the payment that you can focus on other things like compliance or other value-added features.
Okay, Michael, the list of benefits the blockchain could bring to cross-border payments is long. Speed, transparency, lower cost, just to name but a few. What, in your opinion, is the main blockchain selling point for Citi clients?
Sure. So at this point in the life cycle, a lot of what our customers are coming to us with, similar to what I think some of you may have seen announced earlier today, are using blockchain as a solution for very complex business processes that involve multiple parties. Parties that in a traditional treasury or accounts payable solution, plus international payments, plus accounting, plus liquidity, plus a number of operational processes on their sides and their customer sides would have taken multiple organizations, multiple databases, many standards. And what we've seen is customers who are on the leading edge of this are starting to think about the way their own treasury or treasury equivalent organizations work. And they're starting to think about how can they orchestrate all those functions, which are essentially just bits of data that become true or untrue depending on events, and track that through a blockchain system. And they're finding a lot of value in then attaching that to the large-scale treasury and payment services that institutions like Citi offer.
Sheila, what about you? What are your clients looking for?
Yeah, so in the case of our clients, which are primarily small businesses moving money cross-border, interestingly enough, blockchain in itself is hidden from them. It's a technology that our company, Veeam, uses as a rail. And we're mostly using it as a correspondent banking replacement. And we're using that to move it from country A to country B. But when you look at the small businesses, our small businesses are looking to understand, where is their money? Has the payments been initiated? Have the funds been received? Where exactly is it in the food chain? And what we find is, using blockchain, we're able to move the funds from country A to country B quickly, leveraging local fiat and local rails at either side. And in doing that, we're able to give our customers much more precise information about their transaction, and that's what they really want. They want to know, where is the money, have information flow along with the transactions that can be data rich. That's what our small businesses are looking for.
So it's more about the transparency than the speed or even perhaps the cost.
Correct, absolutely.
Interesting. Harry, Swift recently announced a blockchain test to help simplify the Nostro Vostro account reconciliation. Can you tell us a bit about that and how that fits in with the Global Payments Initiative?
Sure. So perhaps first just a very short explanation of GPI and where we're going with that, because I'm not sure with the audience it will be familiar. If you are, apologies for the repeats. So you've talked a little bit about some of the historic frustrations with international payments and correspondent banking. And it's not really a surprise, and we know that this is something that needs to be tackled. So we launched the GPI as a means of tackling exactly that, to give corporates in particular predictability and transparency, and it brings together banks committing to do things in a certain time and to a certain time, in a certain way, and then layers over that a tracker which works on a cloud-based service with APIs to and from the bank so they can ping. And with that, you can get exactly what we're talking about here, which is transparency, where is my payment, what's happened to it, a predictable service which allows me to do my trade supply and manage my finances better than I could have done in the old model. And that's being rolled out as we speak. I mean, it's live since January and will progressively roll out. But we don't see that as a one-off. We see that as a continuum, a series of change. And one of the interesting things about blockchain is that there are pieces in this business where there's plenty of friction, as you can imagine, with 200 jurisdictions in the world and 200 ways of doing things for local legal reasons, not because people are being awkward. Take currency exchange, currency controls, for example. And one of the big problems is actually, I hold accounts with you, you hold accounts with me, and reconciling them on a constant basis is a pain. Let's be candid about this. This is a pain in the system. And one of the attractions of blockchain, and we have a number of other cases we might use it for, but here, this proof of concept is not just a straight test. We've launched with a number of banks, is to actually put those Nostro Vostro accounts, the Latin terminology, on the blockchain and make sure they stay in tandem all the time, so the reconciliation pain, i.e. the cost, can be taken out. And that we would see, if that proof of concept is successful, is something that we would build into GPI as a future evolution of E2 or of E3.
Do you have a time frame for that?
Depends on the outcome, but on the face of it, without any hostages to fortune, over the next we envisage a rolling program over the next 1, 2, 3 years. So when it fits in, that depends on how it works.
Okay, interesting. Harry, a follow-up question. What do you see as blockchain's main weaknesses?
Well, we were discussing this earlier, and there's some fairly violent disagreement on the panel, I suspect, which will be quite interesting for the audience. I think one of its weaknesses, for me, is the tie between the non-central bank cryptocurrency and the technology. And I actually do see here that diverging. And I know you probably want to chip in and disagree on that point, but from my perspective, one of the principal weaknesses is that if you're dependent on a non-central bank cryptocurrency, that's going to be very difficult, if not impossible, to fly in a corporate world on a big scale. When we have a central bank cryptocurrency, that's going to be a different matter. I'm sure that will come. They're talking about it now, but we're not in that world. But there are some others too, but there is also some, lots of strengths. So,
Michael, do you have anything to add to that? What do you agree?
Well, I think that one of the current weaknesses, whether it remains a weakness, remains to be seen as a lot of these ecosystems start to develop. But the sense of portability and interoperability. If you're, at least for my client base, if you're a treasurer, an accounts payable manager, or a business head looking at how you're going to integrate this and where it's going to make the best business sense for your firm, there's a proliferation of so many different ecosystems right now. And there isn't a real sense of how you're going to be able to continue to participate in the world at large with all of your traditional payments and still have access to everything that's developing. And I think the the solutions to that evolve over the next few years. I think you'll see a real difference in the adoption rate in the industry and in the amount of investment that corporations start to put into changing their traditional ERP systems to participate in this once we can solve that problem.
Elizabeth, what do you have to say about blockchain weaknesses?
Well, I like to address that as well. I mean, I think people forget that you can now get your tax refunds back in Amazon points. There's more unused Amazon points circulating than many of the GDPs of the countries I work in. The future is already here. We already have non-central bank currencies floating around. Look, what do you think Alipay is going to do in the future? What do you think PayPal is going to do? Apple, Google. These are mega corporations. We don't even know what the future holds and how these companies are going to be using their points. I mean, I'm obsessed with Flying Blue because Kenya Airways, the only connecting airline in Africa, that's how I get around. I trade those points constantly with people because they're cheaper than actually buying it, and they change the value all the time. I mean, there's countless amounts of examples of this. So I think we have to think to the future, which is already starting, which is there's going to be more than just central bank currencies, especially if my central bank currency is the Nigerian naira, which it is. It's useful in some places, and it's pretty much useless in a lot of others. And I think we have to think past the US dollar. I mean, remember that the SWIFT system communicates mainly via USD, and it's a SWIFT report in 2014 that said 39% of transactions out of Africa go via USD, even though only 9% are destined for the US. That means 30% of all transactions out of Africa make their way all the way over here, then head over to China or Southeast Asia or wherever they're heading, or Pan-African. That's another wasteful thing. Yeah, it's awesome to see where your transaction is. Transparency is really important. But we forget that the bread and butter of that is an antiquated system and it's moving forward. And I really see the weakness that a lot of people see, of this fear, like how are we going to get away from something that's not controlled by a central bank? Future's now. It's already happening. So now let's work with that, which is how do we trade and use and make systems that are interoperable with all these different kinds of currencies that are going to come out.
At the same time, reducing the costs that shifting through various currencies implies.
Yeah, and let's maybe detach so much meaning from the word currency. And I say that to the central bankers to their face. And I sit on 3 central bank committees about this. And I say, let's promote your local currency for the things you need it for. But let's also use other currencies for other things. I'm not going to use my Second Life tokens to buy a pack of cigarettes in New Jersey. I'm going to use my Second Life tokens when I'm playing Second Life, and I'm going to use the US dollar to buy a pack of cigarettes. There are uses for each kind of thing. So let's not be fearful of it, and let's not say it's a weakness, but let's embrace it and figure out how to replicate that and use different kinds of tokens for different needs that we have in our life.
Do you see the incoming flood of tokens, of blockchain-based tokens into the market as having any impact on this?
I mean, the best ones will rise to the top. And it's really cool that we can now vote remotely, and that somebody as far away as Kampala or somebody as far away as Calgary can actually still make a vote on that. And that's exciting. And as an incumbent who's risen up in the face of, as a new entrant who's risen up in the face of gigantic incumbents, it's exciting to be included. And we wouldn't be able to be included if there weren't so many options. And if people don't want to give me access to the USD SWIFT network because I'm a small company in a certain African environment, then what am I supposed to sit on my hands? Am I supposed to just hang out and wait until someone decides to send me an invitation? Or do I reach my hand up and say, hey, does anybody in Japan want to trade with me? Okay. Are we not allowed to trade with each other because we're outside the system? Shouldn't there be a way for people to trade with each other with more options?
What about you, Sheila? What hurdles do you see blockchain as yet having to overcome?
Yeah, when I look at blockchain and the payment system, I guess about 20 years ago now, I was part of the telecom industry. And at that time, what I started working on was actually called Voice on the LAN, which evolved into Voice over IP. And, in the late 1990s, there was a lot of discussions that, Voice over IP would not become very prevalent. And you could see that evolution as telcos started to adopt voice over IP, as bandwidth grew and it moved into the enterprises, as it became more usable even at the consumer level. We all have voice over IP conversations today, ones we know about, ones we know about. It's a heavily regulated industry, and it's regulated country by country. I can have a voice over IP conversation with somebody from Canada to the US and go off the voice over IP networks. But I have to, if I'm having a conversation with India, it has to stay on the voice over IP network, can't go off of that network. So those are two very similar industries, and I see payments and blockchain moving through that identical evolution. And when you look at it, when you see the experimentation by banks and the interest by centrally controlled bodies, you can see that there is such a strong desire for change. And in the meantime, you have the fintechs who are leading the way. We are there and we are pushing those boundaries, actively using these technologies every day and uncovering all the warts. Are there liquidity issues? Absolutely, there's liquidity issues. Are there challenges in understanding how to move within each country and working with the regulatory bodies? Absolutely, there are those challenges. But the fintechs are pushing the boundaries and leading that way and helping overcome those boundaries. That's the state of the union right now, right? And the interest with the banks and the regulatory bodies are helping broadening those aspects of it.
So drawing on your parallel to the VoIP market, would you say that the blockchain sector is more fragmented than that was at a similar stage, or less so?
I would say it's almost identical, because it really is based on country by country. I think what's interesting is there's almost a stronger core technology than we started off in the early days of VoIP. And with global expansion, 20 years later, it's a problem that is being looked at and solved globally. It's a bigger problem to solve. It's an old system that is trying to be replaced right now. So I think the stronger interest is there, and it will have more success than the VoIP technology.
Interesting. Elizabeth, you've been working in the blockchain cross-border space now for some time. What, as a business, have been the major obstacles that you've had to overcome? Are these still obstacles?
I mean, nobody knew what the heck we were doing when we started, and now there's a lot of people at these kind of conferences, so that's one. I have to do a lot less explaining. However, in the markets where I operate, there's still a lot of education to be done. I mentioned before, we're sitting on the Central Bank Committee in Nigeria, which is really amazing to see how excited they are and how diverse of an opinion they've developed on all the nuances of the system. And we're starting to cover some of the things Sheila mentioned, which people don't even get into because they're still saying yes or no blockchain. Well, okay, fine, yes. Now what are the other things we need to deal with? So that's been really exciting to see that maturation process. And then internationally, it's been amazing to work with the FCA and the CSSF in Luxembourg. Both have come around. Recently, just a month ago, the FCA in the UK published a really great white paper opening its arms to the industry and talking about what the differences are if you're using a blockchain technology or not. So that's been exciting to see the regulators. But we still see some of the same problems we've seen in the beginning, which is every time you see a friend in the industry, you end the conversation, know any good banks? We still all struggle with our banking relationships because banks have such many manual processes. So, when I do, out of 100% of the payments I do, maybe 80% sometimes use blockchain, no problem. But I'll spend almost 60% of my finance team's budget dealing with that last remaining 20% of the transactions that still go through bank wires. It's a big stress on a small company. It's a lot of legal bills. It's a lot of headaches and a lot of scary times. And I think that has almost not changed at all. We've seen some new banks come in, but some other banks said, we're fed up. And I think part of it is de-risking. Part of it is a lack of understanding. And part of it is people just saying, wait until we're ready on our timeline. And you say, well, it's 4 years down the line. We've raised so much money. There's millions, even billion in the industry. Its time is now. And we have to go on our timeline. So it's a big bottleneck, I think, still for the industry.
What would you like to change, other than banks coming in with open arms saying, yeah, we'd love to work with you? How is that going to happen? What would you like to see happen there?
I'd like to see Adam at Chain has done a great job of this. Just a lot of people take the idea of just an incubator to actually let's bank them, let's see it go, let's publish the results, let's really move forward. We have so many banks saying, oh, we're open to talk, but what are they really doing? I mean, it takes a lot more than just research. It takes actually moving forward and trying it out. I mean, nothing is really going to teach you more than actually running a small business like this. And I think there's been so few models of a gigantic institution. We work with a South African bank that's like this huge institution. Like, well, how would we even work with you? Would we create a fund? Would it be arm's distance? Would it be a different kind of bank? So I think that is something we're excited to see, because maybe there's not a lot of other technology sectors where you have such big regulated institutions, financial institutions, having to be kind of even interacting with small, spunky little startups like ourselves.
What about you, Michael? How do you see the ecosystem evolving? You work with small businesses, you also work with regulators. How do you see everyone being able to come together?
Sure. I mean, and I think the example that Elizabeth just gave about Chain is a great one. There's a lot of ice being broken in the financial services industry over the last 12 months. The fact that a company like Citi could not just work with partners that talk about working in the blockchain space, but that we've literally been able to get that through our own regulators, legal teams, and install technology that helps us work with them. I think you've seen big steps, and the banks that get it are moving in that direction, trying to understand what it's really like, what it means to run it, what it means to work with these folks. And I think there's going to be a responsibility that comes with that, right? You'll see the technology itself is going to move away from the idealized state and move into the real world. There were presentations earlier today where people were talking about how do we solve the settlement problem, and some of the things that are being put out sound a lot like offline settlement or continuous link settlement. So you'll start to see real compromise and experimentation around this ideal technology. And only when that starts to happen in the real world and there's partnership and real transactions running through it, will this become mainstream. And I think everyone's pushing in that direction. You're just going to see it grow.
Was there a timeline?
I think this year has been a very important year in terms of the number of things going on in the payments industry. It's a very special time. There's the SWIFT GPI stuff happening. There's faster payments. There's an increased amount of regulation all around the world demanding more information on every payment that gets sent. At the same time, there are regulations coming in forcing people to collaborate more and share more of their information with the wider market. There's technologies like blockchain coming out. My clients think of my job. My job is to make sure that their payments are resilient, that their funds are safe, and that we know how to guide them on this journey. And there's never been a time in a treasury client's life, I think, when there are so many different things coming at them from the markets, from the trends, from the technologies, from the possible partners. And over the last 12 months, you start to see the first generation of these blockchain-driven technologies come out, as well as real solutions from these fintechs and from banks like Citi. So it's happening now. And over the next 12, 24 months, you're going to see a further mainstreaming, I think, of some of these technologies and ways of doing business.
Interesting. Sheila, question, do you still see banks dominating the cross-border payment sector in 5 years' time?
Absolutely. I mean, just to go back to my VoIP example, it was when the telcos, their adoption of VoIP, that allowed it to expand and become a mainstay. And the exact same case will be for people's banks. People go to their banks, the companies rely on their bank, large treasury relies on their banks. There's no doubt about it. The role of fintech is to almost experiment and bring out new technologies and new ways of doing business, different ways of treating customers. The small businesses that we're dealing with, you're dealing with folks that are, businesses under 25 people. They're experiencing personal payments on their mobile devices, right? They're experiencing friendly applications. They have the same expectation when they start doing their cross-border business payments. They want to interact with technology the same way. They want it to be as easy. They don't want to have to know everything about the parties on the other side. They want their banks to be able to help them. So our role is to experiment with technology and bring that to the forefront. Banks' responsibility is to deliver it to that next level of scale.
Harry, I imagine you're very relieved to hear that. Swift being the incumbent, how do you see the development of the ecosystem? We've heard tonight about, and in other panels so far today, about the importance of creating an ecosystem where the different players work together. How do you as the incumbent see that?
Yeah, I'm not sure. Well, I suppose for corporate payments, you might say we probably are the incumbent. So, but in general, in the whole space of payments, there's plenty of other services out there. So I wanted actually also to pick up on one point you made. I think the thing that is fundamentally in the corporate space means that banks will be there is the liquidity requirement for that business, because it's a significant liquidity requirement to support that business, and it's therefore, I think, very much something that banks will continue to do on that side. And then, of course, it's a question of making certain that banks and us and other providers provide the service that corporates need for their payments, which is quick, predictable, transparent, and using as little liquidity as possible and able to find out what's going on, what happens if something goes wrong. In terms of the ecosystem, I don't think this is the ecosystem is actually enormous. So, for example, I wouldn't pitch GPI as an alternative to something. We're already looking at how we bring in more fintech type solutions to that, and not necessarily provided by ourselves. That's part and parcel of our whole ethos, is to create an ecosystem around GPI and other Swift services where banks and other financial service providers can use the services and bring them together, because we don't have the answer to the life's universe and everything. Well, actually we do. It's 42, but that's another. Half the audience should laugh and half the audience should say, "What's he talking about?"
For those that don't know what you're talking about, could you fill them in?
Hitchhiker's Guide to those who haven't seen it, but
Give us the Babel fish.
which is indeed is a religious topic. But coming back to the ecosystem, it's about bringing in those new ideas and new solutions, and actually, to your point earlier, properly testing them, which is why we launch proper proofs of concept rather than laboratory tests. We put them out there with banks involved, and so I think that will it will take time, because real change for thousands of institutions does actually take time. And then you have the reality of all of the individual jurisdictions around the world to cope with, so that will also take time. But I'm not talking about donkey's years. I'm talking 2, 3, 4 years. It's going to be quite an exciting time, actually.
It is, because that's really not very long, is it?
No.
Especially when you consider how long it's taken Swift to build up the system that it has, and the reach. Elizabeth, you were here at Consensus last year. What big changes have you seen since then in the sector?
Well, like I said before, I think we've seen a lot of growth and consolidation, which has been exciting. I think we've seen, well, certainly with Coinbase taking a dominant role in the US exchanges, and we have Bitstamp in Europe, and Kraken kind of eating up some of the smaller guys. That's been exciting. And when you talk about core capital, I mean, these are heavily capitalized companies. This is not some fly-by-night little shop. I mean, you can be capitalized and you can have that kind of security, and we've seen that. We've seen the really big winners look almost like non-bank financial institutions, which that's a genre of a financial institution, and it's something that we can aim for. And I think that's been really exciting. And then those kind of happen in the places where you had regulatory clarity earlier. But I think the biggest story of the year already is Japan. And here we have a market which had the biggest scandal of all time, and everybody said, you'll never recover. I still get questions about Mount Gox in Zimbabwe at a random conference. Oh. They're still talking about it. And they had every reason to just say, you know what, don't ever mention this to me again. And instead, they said, actually, this is undeniable, amazing, efficient technology. Let's dig in and see how we can make it work. And I think that's just so exciting that the Bank of Japan and all of the companies in the space, including the head legal at Kraken, who did a lot of work on that, really went forward, and they created some beautiful legislation that we share with central banks all over the world to show what could be done. And it has been really, and you don't always have to make it legal tender like they did there, but they made a way for these exchanges and these companies to introduce technology into the ecosystem, be capitalized, but not over-capitalized to the bank level, have banks be able to invest in it, and it's kind of like a perfect solution. And they really had no reason to do that, and they did. And I think that's been really exciting and comforting to show that people are not saying, the same question was, well, will it still exist? It is existing, and we're moving forward. And I think we're past critical mass. It's going to happen, but what form will it take? And let's see what happens next year.
Do you find you get more questions about Bitcoin price movements than blockchain impact?
I know, but I mean, I live in West Africa, so I mean, it's way less volatile than the Nigerian naira. So especially in an hourly and a daily era, and it is a little bit more logical too. And we have at least one rate. In Nigeria, we have 3. So I mean, for me, it always was a question of liquidity. As the market gets more liquid, as more actors and entrants come in, I mean, we had BitOasis had a huge month introducing the technology to Saudi Arabia, and we saw huge volumes come out of there as a whole new market has now entered. And we're going to just see that happen more and more as these little startups get their licensing, keep their bank accounts, start to grow, technology matures, and we're going to see more and more people come into this. And if it's called Bitcoin or if it's called Future Coin or Taco Coin, who cares? The idea is still there that people want to be able to trade in the way they like without having such restrictions. And I think we've seen now in this globalized world, it's almost impossible to have one global system, from a top down. There's just too much diversity in income, in behaviors. So I think it's going to be really exciting to see these different kind of systems come up.
Just saying, Michael, from the incumbent's perspective, what changes have you seen over the past 12 months?
I think, so one of the biggest changes, and it's more of a change maybe within this room and within this sort of group of people, is 2 consensuses ago, I think the question was, what will banks do once this technology is mainstreamed? And what room is there for somebody who intermediates or brokers trust in a trustless distributed ledger system? And I think now we've collectively moved past that over the past 2 years. And we're in a space where people are saying, of course, we want to figure out how to connect this fantastic technology to traditional bank rails and to some of the traditional trust networks, because everyone's going to have a better and bigger pie from that. Everyone's going to be able to benefit, the whole world essentially. And I think what you've seen as a result of that on some of these leading edge fintechs and early adopters and users of the technology is you're going to see the opportunity. This person who deals in payments are at the very end of a lot of different things that ultimately should create value for the entire world, or for a locality, or for some other kind of ecosystem. This technology is enabling people to come up with so many new ideas that create economic opportunity. And what I see is that I think the overall payments pie for international payments itself should end up growing as a result of this. There's just more opportunity to create commerce and drive commerce throughout the world between different people who weren't connected prior.
It's interesting, very uplifting. Since we only have a very few minutes left, I'd like to ask all of the panelists to share with us their view of what the changes will be over the next 12 months. What will we be talking about at the next consensus? Harry, do you want to go first?
I think we'll be, change never comes as quickly as we can think about it. But I think it is true that at the moment this is a brilliant time to be involved in international payments, because the change, and the real change, I don't mean the advertising, but the real change that we can bring in with different approaches to improving international trade and supply chain and corporates' ability to make payments is brilliant. And I think in 12 months, we'll be talking about how that has changed and how blockchain has a role in it. It's not the solution to life, universe, and everything, but it has a very distinct role solving a very important set of problems.
Elizabeth?
I think this is the year where we're going to see a lot more corporate partnerships and a lot more big corporates get involved. Even on our level, we've had some huge corporates join us. And they said, we were waiting around, we really like you, but we were waiting for our regulator to provide some clarity, and that clarity has come. And so I think we're going to see some really big partnerships, and maybe not scale at the level of like the top 5 banks did it, but we're going to see some undeniable movement there with some products and brands you already know now incorporating distributed ledger technology.
Michael?
Yeah, I mean, I think my guess is that if you looked at the difference between the attendees over the last 2 years versus this year at this conference, the bulk of the new ads are in what I would consider to be the more mainstream, either corporate or financial services space, people who are thinking about how they're going to start using this technology in the real way. And I think if we look back next year at where we were today, we'll see this as a real turning point between where this thing went from being a very idealized new technology to something that became real and started being used, similar to the VoIP examples from before, or if you think back to the web, by the time people started talking about Web 2.0, it had already happened. So I think that's where we are right now.
How about you, Sheila?
Yeah, you are seeing applications on the blockchain move from the test labs and the incubators out into real life. And, points where their scale starts to be tested. We're on to solving sort of that next level of problems, not the issue of can it do it, but how it will do it and how it will build. And I think the next 12 months becomes more focused on the scaling as opposed to just, discussing, is this a viable technology that can be used?
Interesting. And again, in the few minutes we have left, I'd like to give you guys the chance to talk about what your organizations individually are going to be focusing on over the next 12 months. Harry, do you want to go first?
Well, that's, pretty much the same answer as the previous question. GPI will be the focus. And within that, how do we drive real improvements which, whether you be some of the financial institution companies like others around this table, or corporates can actually get those real benefits. So driving that through thousands of institutions worldwide, and then on top of that, bringing real technology change on the back of that in V2 and V3 of this as we go forward.
So it's taken us 4 years to get into 8 countries. And all of a sudden this year alone, we'll probably go into 5 more countries. We're going into the North Africa, a little bit more in Europe where we've been. But I think for us, we've really gotten our groove on how to introduce this idea to central banks, to get permission to do what we're doing. The banks are becoming more aware. And what that means is that we can work with bigger customers. So we've already seen our transaction volume skyrocket from $100 when we started to now over $25,000 in average transaction. And our customers trade with us every single day and use us for treasury reasons. So I think just working with them more on how we can do other value adds. So we did a partnership with one customer on offering credit to their own customers, or value add features, or maybe adding more KYC. So I think once you have the scale and the footprint, you can then finally do what you meant to do in the beginning, which is innovate into a lot of different products. It might have taken us a few more years just because there was so much education, but I think now is really, as Sheila said, this is the scaling point.
Exciting. Michael?
Great. I think we're going to continue to focus on the work we've done leading up to today around Citi Connect for blockchain and understand more about the market there and what that ecosystem truly means. And ultimately, we're going to look more holistically at our client base. We've got clients who are still sending us handcrafted, comma delimited flat files in order to make payments, but they're starting to ask us what blockchain means. That's a very big chasm. While at the same time, we've got other clients who are coming in who the sales conversation is entirely in XML and API terms, right? So we're talking to true, people who were already born when this technology was already proliferating, and looking to make sure that Citi can continue to bridge the gap for all the clients, advise all of our clients the right way, and understand how we can make sure that this new technology, as an enabler for our business, we can add our trust, our resiliency, and our tremendous global network into that and just continue to advise clients.
Sheila?
Yeah, the next 12 months is going to be very interesting for Veeam. Having just come off a, sizable round of financing, for us, it's all about scale. What's interesting for us is we're not a remittance solution. We're not just acting on behalf of the sender of money. We get to have contact with both the sender and the receiver of funds. So, to deliver a unique solution for them, a collaborative payment solution for both the sender and the receiver is, a unique opportunity for us in the market. Continuing to push technology to its limit, making sure that it grows along with our needs and our customers' needs. Our round of financing delivered very interesting investment partners around the world, both out of Australia, out of Asia, out of Japan specifically. So that global interest and solving those problems for small businesses is so strong that it's so broken and ripe for the fixing that it's just going to be a very interesting scale year for Veeam and for small businesses. Everybody's going to benefit.
Well, I think it's clear that this is definitely going to be a space to watch over the next 12 months. A lot of work is in the pipeline, a lot of work has already been done, and we're going to start to see some very real results impacting different types of business models and different types of geographical and economic sectors. I'd like to thank all of our panelists, Harry, Elizabeth, Michael, and Sheila, for being with us today. Thank all of you for joining us, and enjoy the rest of the day.